Hello, good day. Welcome once again to my channel. Welcome to Profitable Forex Trader. In this platform, I teach you how to trade Forex profitably, consistently. I'll teach you step by step how you can be a consistent, profitable Forex trader. All right. There are so many things to talk about, but we're going to be doing it step by step. If you have not watched my previous videos, the ones that I did, candlestick analysis and all that, I think you should go and watch them so that you will be abreast with how far we have gone and where we are right now. All right. I'm so sorry I've not posted any video for some time. It's because I've been busy with other things. All right. But now I want to start posting videos on how we can be making profit consistently, step by step. For you to be a profitable trader, you need to be patient. So patience is very, very required. Right? It's not something we rush. One of the reasons why people lose money in forex is because they lack patience. Patience to wait for the appropriate time to place a trade. Right? So it's something that you need to learn how to wait patiently. All right. So today I want us to look at um, forex strategy or plan. All right. Strategy or plan is something that really cannot be overemphasized because there are so many forex traders that have lost a lot of money. Why? Because they don't have a strategy, they don't have a plan. And I often say that what is the essence of trading when you don't have a strategy? I know many of us is out of ignorance and we didn't get the appropriate training that we are supposed to have. Some of us are in a rush to trade, we are in a rush to make money, therefore, we do not get the required education that we need. Even some that have the education, they do not know how to apply the knowledge, the skills that they have acquired over the period, maybe over the years or so. All right. So on this platform, I want to really admonish or advise you to really be patient and create a strategy for yourself and be disciplined to follow your strategy. Because it's one thing to have a strategy, it's another thing to follow through your strategy. Now, what is a strategy? Strategy simply means a plan. If you don't have a plan, then you are planning to fail, something that we know. So, Forex is not a gambling venture or gambling business. It is a business that you want to make profit from at the end of the day. Therefore, it should be treated as a business. All right, so every business has a plan. So in your forex trading, you should also have a plan. So now, what is this plan? What is this strategy I'm talking about? There are rules on how to trade, entry rules and exit rules and other rules. Right, we are going to look at this. We might not be able to exhaust it today, but subsequently, I'm going to be uh, showing us how to have a good forex strategy and also how to apply it in our trading. All right. So forex strategy, there are rules that tells us how to trade, how to place a trade, for example, how to exit a trade with a profit or loss, uh, what to look out for before placing a trade, the session, because we have three or four sessions now. We have the London sessions, we have the New York sessions, we also have the Asian session. All right. There's another session, four sessions. But the European session, that is the London session, and the New York sessions are the most traded sessions. So you need to decide which of these sessions you want to trade. All right. So your Forex plan should be written down. All right. Like I said, example, you must write down the name of the strategy because the name of the strategy is very, very important. So that as you are making a profit or loss, you'll be able to identify, okay, I used this strategy It worked for me, it did not work for me, and all that. All right, so you must have a name for your strategy. That's one. You must also decide what session to trade: London session, European session, or Asian session, whichever session that you want to trade. And the next one, the pairs to trade. What pair do you want to trade? Is it Euro USD and others? You have to identify one or two that you will be trading. You cannot trade all the pairs. You have to decide which one to trade. All right. And the time frame also. What time frame are we going to use? And the time frame we are going to use is related to the kind of trader that you are. There are several types of traders. You have swing traders, position traders, day traders, scalpers, and all that. So you have to decide which one. The kind of trader that you are will determine the time frame that you will be using to trade. So that will be written down. I want to be a day trader, for example, and these are the time frames I'm going to be using to trade. You're going to write down how to analyze your market, the time frames you are going to be using to analyze your market, from the higher time frame to the lower time frame. All right. You also have to write, okay, what time frame would be appropriate for you to place a trade? Would it be the 5 minute time frame, or 15-minute time frame, or 1 hour time frame, depending on, like I said, the kind of trade that you are. So you need to write these things down. And also, you need to write the kind of how much you want to be trading with for each trade. All right. It's often advisable that to place a trade, you use 1% of your capital, right, to place a trade. Don't use 10%. Use 1% to place a trade. You must have this capital conservation attitude. All right. You must first of all desire to protect your capital. All right. So that is why you invest 1% of your capital on every trade that you take. All right. Now, if the trade goes against you, how much are you willing to lose? All right. Also, you should be willing to lose that same 1%, because don't trade with any money, or don't invest any money you're not willing to lose. Okay. Since you are willing to lose 1%, so you trade with 1% of your capital. That in case the trade does not go in your favor, it goes against you, you would only lose 1% of your total capital. All right, that should be written down. And let's also say that in case the trade goes in your favor, right, you would be willing to make a profit of, say, 1.5% or 2% of your capital. That's ratio 1 to 2, or ratio 1 to 1.5. All right, it should be written down. All right. You must also write down about how to manage your emotions. Management of emotions is very, very key. That is a topic for another day, on how to manage our emotions, because emotional management is very, very important. You can make profit and lose the profit you've made based on your lack of control or lack of emotional management. So you must write these things down. All right, how to manage your emotions. All right, when to enter the trade, when to exit the trade with a profit or a loss. All these things should be written down. Now, after you have written these things down, then what you do is you backtest your strategy. Now, there are some people that create a strategy, and because it did not work for, say, they place 5 or 10 trades, and they believe that the strategy is not a good strategy, then they look for another one. It doesn't work that way. For a strategy to be reliable or not reliable, you have to backtest the strategy for at least 100 trades. And that's where patience comes in. And many of us are not patient to do that. All right. So you backtest your strategy for at least 100 trades. And if it works for you, then you can now apply it as part of your trading strategy. All right. But if it doesn't work for you after 100 trade or so, you can look for another strategy, create another strategy. And the strategy that I am using would be different from the strategy that you are using, because what works for me might not work for you. Because there are people that have said that, oh, show me your strategy, give me your own strategy. I want to be trading with your own strategy. It doesn't work that way. You have to create your own strategy yourself, because you have to decide what kind of trader you are comfortable with, what kind of trader you want to be. All right. So if you have written down all your strategy, now the patience to wait for you to apply your strategy, your training is very key. All right. You don't have to trade every day. because not every day is a good day to take a trade, right? Depending on your strategy, right? If you see your strategy on the chart, when you open your chart and you see the strategy, everything you have written down, you can see them on the screen, then you can place a trade. But if what you have written down is not seen on the screen, on the chart, you wouldn't want to place a trade because you are going against uh, your trading strategy or your trading plan. All right. So many people go against what they have written down. It is not enough to write your strategy down. It's not enough. Writing it is okay, but you do well if you keep to your strategy, follow your strategy. It doesn't matter what you see on this chart, as long as uh, it is not at par with what you have written down. You wouldn't take the trade, right? Sometimes in a week you can see maybe one, two, or three trades that goes in line with your strategy. All right. So don't think of getting rich quick in forex trading. If you all you're thinking is you want to get rich quick in forex trading, that's the beginning of failure. All right. You are going to lose your money. You're going to blow your account. So the thing you should think of, very important, is to protect your capital. You hard earned money, you protect it. Wait patiently for your strategy to be seen on the chart before you place the trade. And after you place a trade, for you to exit a trade must be according to what is written down in your journal, or wherever it is written down. Right? So when you do this, you are going to discover that your trading result is going to change tremendously. It's going to change. But if you don't keep to your trading plan, then you are going to be losing your money. You're going to blow your account. That is it. So no professional trader, no good trader trade without a trading plan. So if you want to be consistently trading profitably, you have to have a trading plan that works, not the one that does not work. If you discover after 100 trades this trading plan or strategy does not work, then change it to another one that works. Right? Stick to your trading plan, and in the long run, you are going to be making profit consistently. Right? I hope this short video was informative. Now, let me give you a clue of what I mean by placing a trade according to your plan. Right? Let's assume in your trading plan, you say that you're going to trade Euro USD or GBP USD. This is GBP USD, Great Britain Pound USD. That's what you're going to be trading. So you stick to it, and you're going to trade when it's on a trending market, whether it's uptrend or downtrend. You stick to it. When the market is going sideways or ranging market, you don't trade. You just wait until it's trending, either it's trending up or down. Right now, when it's trending up and down, and in your strategy, you say that you will not place a trade when there is an impulsive wave. You place a trade when it corrects back to a support or a resistance, depending on whether it's an uptrend or downtrend. Now, if it's on an uptrend, you would want it to correct back to a support. Not only that, after it corrects back to a support, you'll be looking for a reversal candlestick pattern before you place a trade. For example, now this is an uptrend, all right? Now, what's the definition of an uptrend? You have higher highs. This is a high, this is a high, and a higher low. This is a low, another higher low, another higher low, another higher low. So this is an uptrend. Now you want to trade when it's on an uptrend. Now this is on an uptrend. Now you will place your trade when it's correct to a support. Now where is the support? Now this is a support. This is a support. All right. This is a support. Um, this is another support. Okay, and this is another support, and also this is another support. All right. Now, when it goes up, when you have an impulsive wave, you not place a trade. You wait for it to correct back to this support. All right, correct to this support. Now, when it correct to this support, in your strategy, you could also write when it correct to a support, I want to see a reversal candlestick pattern, like a pin bar, hammer, doji, and so on and so forth. Now, when you see, for example, this is a hammer. When you see a hammer, all right, this is a hammer. It is as par with your trading strategy or trading plan. Now, after the trading, after the hammer appears, what next? The next candlestick that opens up, if it goes above this hammer a little bit or a few cents above this hammer, you're going to take the trade. Right now, when it goes above this hammer, just few cents above it, then you place a trade. You see that it's going according to your plan. You place a trade. Now, after placing the trade, immediately you set a stop loss. A stop loss 1% of your capital, say 10 pips. Immediately you set your stop loss to 10 pips. Could be somewhere here. Let's assume it's here, 10 pips. Then after you set your stop loss, then your take profit is could be 15 pips. That's 1.5% of your capital. 15 pips, for example. Then you place your take profit to 15 pips. Say somewhere here. Let's say somewhere here. Example. Let's say somewhere there. It's an example. All right. So if now you have set according to your trading plan, you have set your stop loss to 10 pips, take profit to 15 pips. Now, if it goes up and hits your take profit, now you have made a profit of 15 pips. Then if it goes against you and hits your stop loss, then you lose only 1% of your capital. Right? Some people, when it's the price is going against them and it wants to hit their stop loss, they keep on, you just shift their stop loss again, keep shifting it. No, don't shift your stop loss. Even if it hits your stop loss and you have a loss of 1%, it's normal. Loss is normal. See it as a normal thing in trading. It's not strange. Accept a loss and find out what is the reason why I had a loss. All right. Is it because I did not analyze the market very well? Or whatever it is, learn from your mistake. All right. Now, when it hits your stop loss, don't get bothered. Don't worry. Leave it. Refresh yourself. Take a walk. Come back again and look at the market again. You look for another trade that is at par with your trading plan. That is it. If you don't stick to your trading plan, you will not be a consistent, profitable forex trader. All right. So I want to believe that this short tutorial was informative to you. I want to believe so. And I want, if also if you have any comment, you can drop it in the comment section, and I will do well also to respond to your comments. All right. Also, don't forget to like this video, and if you have not subscribed already, please subscribe so that subsequently, as I upload more informative teachings on how to be a forex trader, how to be making profits consistently in your forex trading, you'll be one of the first to get it. All right. So I'll withdraw the curtain of this tutorial here. Once again, please do not forget to like and subscribe. I wish you all a great day. See you next time. Bye bye.